I want to use this kind of, let's say, opportunity to give you a fun trivia fact, because it goes well to the context of what's happening here today, is that it's just how difficult it is to even imagine how much money 1 billion euros or dollars are. And it's just a very good exercise, is that if you think, and we can pretty much all of us imagine how much a million is. And if you think how much time 1 million seconds is, it's 2 weeks, roughly, very roughly 2 weeks. Now, to put things into perspective, how much time is 1 billion seconds? It's 36 years. So this is the difference in magnitude between $1 million and $1 billion. So this is absolutely amazing, Sam, what you guys have been able to pull off. Huge respect, and always, and now that we're going into my presentation, money is one kind of like way of materializing your personal power. So you guys have a lot of it. I'm going to share my screen. I have a presentation prepared, so to give a little bit of structure for my presentation. All right, so Sam, can you give me thumbs up if you actually see something on the screen? As you're the only one. Okay, thank you, Sam. You're the only one who I see now that I went into the presenting mode. So yes, welcome, guys. Very glad again to see now it's close to 50 people here. What I'm going to talk about first is, of course, myself. So this is me, as you see on the picture. Who I am, still a mystery. What I am, however, is many things. I'm a father, as you see on the picture. I'm also head of the family. I'm running a few businesses. I've done close to 100 investments today. I started investing through Build It Hardware Accelerator, which is in IoT space. And today with Cocoon Ventures, we're in a space where founders see entrepreneurship as self-development. So it's industry agnostic, but we're in the pre-Series A, Series A, roughly at the stage with the companies which we work with Cocoon. And out of my free time, I like to do stand-up comedy. So now if we talk about funding as such, so and look it from the perspective of company, we're talking about growth, right? So everybody who goes after money goes to grow the company one way or the another. And as you all know, growth means change, right? So, but now, in order to grow your company, this is already what we see in our work, is that many founders kind of struggle to understand, is that the company can only grow if you grow as a founder, right? So you need to grow as a founder, and you need to change as a founder in order for your company to be able to grow, right? And what we see, fundraising is a business challenge, right? And whatever the business challenge which we take, there's always linked to the founder psychology. And what I mean by founder psychology is that what makes you what you are, how you live your life outside of the company, what are your patterns, what kind of beliefs you have picked up from your childhood, which are still with you today. So this is what I mean by founder psychology. And the question which we are in the Cocoon and in the Cocoon Ventures are trying to look for an answer, and hence also today's topic, invisible traits, which are stopping you from raising the VC fund, is always the question, what is the real challenge, right? So, because if we go now out for fundraising, there's two ways to look at it. One way is, I just need to get it done. So there's a certain amount of money. I need to execute my plans. I don't care how much time it takes. I want to get it done fast. And I want to have a certain money amount on my bank account. And there's another way you can approach that. And another way is that, okay, if I'm going to take that as a learning opportunity, then I need to approach it a little bit differently. And so this is what kind of my presentation is focused on. And the question is, like, if fundraising is not going as the planned, or there's difficulties in closing investors, or negotiations are not going as you wish, then the question is, what is the real challenge, right? So, and now if we take fundraising as such, it's interesting that from the perspective of self-growth or self-development, fundraising puts us under a lot of pressure. And if I'm bringing an analogy from diamonds, you know, the thingies you put on expensive wedding rings, is that how you can test the quality of diamond is if you put it under the pressure. And if it cracks under the pressure, then the quality wasn't the best one. And same happens with people. But if you want to actually see what are the weaknesses in people, just put them under the pressure. And fundraising is putting founders under a lot of pressure. And now, if I'm looking at in how many things fundraising can go wrong, there's like endless count of things. There's just few things which pop into my mind. And also, as these pictures, I'm now talking about the face value, like what happens in the fundraising. And maybe Sam will not agree to me, but I'm gonna also let you in the secret. From a venture capital perspective, no means no. But you very rarely hear a investor say no. They say something like, come back in 6 months, come back when you have more traction. What the reality is, whatever the objection is, or whatever they say that that come back after X, Y, Z, what you're actually getting is no. And what are the typical face value situations why you're getting no is, one is, for example, these are 3 things, you know, team, market, product. Either your team isn't performing or there's not large enough market. For venture capital in particular, for them to earn back their 100x, which they're looking for, the market needs to be at least like 500 million, $1 billion market. And this is really the minimum, or your product sucks, right? But what you also get at the face value thrown back at you is that you're not ambitious enough, or it's not the right time. And very often what you get is that we have invested all the funds and we're not looking for the first new investments. But in reality, it's very rarely the case. Or you don't have enough traction, come back later, you don't have the relevant experience. So these are the kind of the face value things what you're getting. And it's actually very difficult to learn from this, because they very often also are not really the real cause. And the real cause you will very rarely hear from investors. And the reason is that they don't want to keep the door open. And I do the same. It's not like I'm saying that venture capitalists do it. I do the same. But also the reason is that I don't very often see founders who are genuinely interested in learning what is the reason behind the no. So, but you can do it without me. So if we are now looking at beyond the face value, and now I'm talking about specific shortcomings. So if you put yourself under the pressure, just like the diamond, then what will become visible is your shortcoming. And what is a shortcoming? You can say that the shortcoming is your weakness. It's something which is stopping you from achieving the goals which you want. This is one way of looking at the shortcoming. It's also something you can look at. It's a behavior which is working against you instead of for you. And also all these behaviors is not only working against you, but also against the people around you. Or, and also one thing about shortcoming is that usually you're kind of married to them for life, right? But there's a way you can transmute them. And I have picked today 3 shortcomings which are like very, let's say, often become visible when you go for fundraising. And now if you're interested in looking at this as an opportunity for growth rather than just something which needs to get done, then you can look at the shortcomings. And I picked first one as fear. And every shortcoming you can look at 2 perspectives. One is an active perspective of the shortcoming, another one is passive. And what's the difference between the 2 is that active is something which you do outside to other people. This is how your shortcoming or your behavior becomes visible. Inactive or passive is something which you do to yourself or you let others to do yourself. And I'm just going to bring you a few examples. So if I'm looking fear as a shortcoming, there's 2 ways it manifests itself. On active sides, it manifests as obsession with having to control. On the passive side with escapism. So like if I'm putting it now into the funding perspective, so what does clinging mean, for example? What does a clinging behavior mean in fundraising is that if you just don't take no for an answer, you're like so convinced that, yes, this is the venture capital firm I'm gonna work with, and you just keep sending in your tech every 2 weeks. So this is a clinging behavior. It does not help you. For example, you become defensive. This is another behavior. which is with obsession to having to control and or wanting to be right. And this is the, how can you recognize that you want to be right? If you ever have to say the sentence, wait, you didn't understand. This is where you're becoming defensive and your shortcoming is becoming visible, or you become demanding, either in terms of the terms which are offered. So this is, for example, one how the obsession for having to control comes visible. So these all what you see on the slide are behaviors. Now, on the passive side, on the escape side, this becomes visible, for example, as dishonesty. And this is unfortunately so true in fundraising as well, is that founders come in, and for me, how the behavior becomes visible is if somebody doesn't know an answer, but regardless gives you one. And then it comes from the fact that people are afraid to say, I don't know. So they will invent you an answer. And if that happens, and on the feeling level, I understand right away whether the answer is something which the person knows from experience or it just invented an answer. So if that shortcoming comes visible, dishonesty, I'm really reluctant to invest. Or lack of self-belief, and this you see also very often, and it even boils down to the wording which you're using. Like, this is what we want to do, rather than saying that this is what we are doing. So these are like few examples how these come into daylight. So not sunset, we're not sunsetting anybody here. They come into the daylight, and but the question is like, what can you do about it, right? So if you recognize any of these behaviors in fundraising, but also in your life, what can you do about it? So the good thing about weaknesses and good things about shortcomings is that they're also your potential. And that's why I'm talking about opportunity to grow through the process of fundraising, to grow personally. So if this is your opportunity to grow, so where's this growth potential, and how you get into the growth? By recognizing what your shortcoming is that to turn it around. And now the question is like, what you need to be asking in these behaviors is that, what is this behavior good for? How can I put this shortcoming which I have and I recognize in myself into good use? So if I'm taking, for example, obsession with having to control, if I want to put it in the good news, like good use, one is that people who are very controlling, they typically are seeing all possible scenarios because they want to avoid any failures. So this is very good in contract negotiations. So with VCs in particular, with angels it's less, but with venture capital, you need to read the contracts. So like literally, devil is in the details. So you need to read the contract. So if you have obsession to control, you can put that into a positive use. So instead of being a defensive, use it to dig through the contracts, right? Or you can use it as attention to detail. What can you use the escapes or these, let's say, behaviors which are under escapism, is that can make you fluid, right? So what kind of people are avoiding other things? They're like, they becoming super fluid, and fluidity, if you're trying to escape a challenge, for example, is not life supporting behavior. But if you put it into a life supportive play, fluidity means that you can negotiate contracts, for example. You don't have, let's say, absolutes, and this actually is very good in business environment. So egotistical behavior is the next one, a big one actually. And why is it in the middle in the presentation is that actually all other shortcomings, they have a roots, and very deep roots, in egotistical behavior. How do you recognize it? It comes in the form of self-importance and self-pity. So it's the same coin, two different sides. Let me take an example, arrogant. If I see an arrogant founder, it's very unlikely I'm interested in investing. And this also boils down to, you know, this whole story which they tell you about venture capital, that this is like marriage. And indeed, it is like marriage, because there's going to be hard times, there's going to be good times. So I don't want to be in one boat with arrogant person or self-centered. And one thing, actually, also what Sam pointed out today, how can you know that your self-importance is coming up, is if you're long-winded. And long-winded means you talk too much. Sorry, but you talk too much. And this means long-winding. Instead of putting what you want, just as Sam said, like in 2 sentences, what is what you do? You need 25 sentences just to explain the problem. You're long-winded. And this is a shortcoming, definitely. So how can you put self-importance in your use? Is if you turn it around, you can turn this into belief in others. And this is a tremendously, like, what's the word, powerful tool if you can believe in others and you can inject this belief in the other people as well. So self-importance can be turned around, same as with self-pity. And self-pity, unfortunately, is one of the most common shortcoming which comes visible when people go fundraising. And this is always, you know, these investors, they're stupid, they don't understand my problem, whatever, like, world is against me, and my email doesn't work, and life is hard, and everything sucks. So this is if you go into the victim mode, right? So being a victim, being hard done by, this is where you go into self-pity. Self-pity, again, as you might know, it's a huge weakness, right? Nobody really wants to identify themselves with the victimhood, and also, and the same with fear of being wrong or fear of criticism. So how do you turn it around? Is by taking radical responsibility. But what can it be good for? Self-pity, in the beginning, it seems there's no way it can be good. By the way, it's a very interesting fact, which most investors can agree to, is that if things start going wrong, then it's always investors' fault, like always. It's always investors' fault. Very rarely I see a founder who says, okay, hey, you know, we really screwed up. It's either investors not giving enough money, or they're not opening the doors, whatever. It's always the investor's fault. And this is the taking the victim position, right? How can you turn that one around? Well, you can turn that into being humble. And you can turn that to start to respect and nurture yourself. And this is huge, again. Nurturing and respecting yourself is something which most startup founders forget. They're so much focused on outside world and so much focused on delivering the results, they forget themselves. And that's why, by the way, like roughly, statistically, 1/3 of startup founders, they burn out. In reality, the number is most likely much higher, but we're still not at the point where people are admitting that they have a mental issue or that they have burned out. So very likely the number is higher, but officially it's about 1/3. And it's because you neglect yourself. So, but self-pity can be turned into respecting yourself. And the last one is resistance. And that being, for example, disrespectful. Disrespectful for me in investor meetings, that if you come in late, this is disrespectful. Disrespectful if I ask you to send in the pitch deck before you come, you don't send in the pitch deck. Dog with a bone. This is a really good one. You know, you get hold of something and you never let go again, or you're very aggressive. Aggressiveness is definitely a shortcoming. Does not help you to close the round. And aggressive means that we have a meeting yesterday, today in the morning, you call, have you made up your mind? And I'm like, I don't know. We haven't even started due diligence. And then next day you call me again, like super aggressive, and not wanting to get let go of the goal, and or being big-headed. And big-headed means that you're not coachable. And this is something which most investors fear like fire, and for a good reason, is that if you're not coachable, we know for a fact that if things start to go south, as they say, then you're not taking any advice from anybody, and this is not good. What can you turn it into around is persistence. And do I want to invest in persistent founders? Yes, I want to invest in persistent founders. So every weakness can be your potential. And same is with the non-active side or the passive side, which is not listening or procrastinating. And procrastinating, I think all of us know very well. And this is when very often the procrastinating is actually when we don't pick up the phone to do a follow-up call. We had a meeting and there's 2 weeks and I don't have an answer from investor. And I'm just procrastinating to pick up the phone because I don't want to hear that no. And being in the denial is the same. You actually know that what the investor said is no, but you don't like to take it as a, and when you say, you know, actually I still see there's an opportunity, you start selling this story to yourself. So this is what the denial in investment looks like. What can you turn this around into is durability. All right, and this is it. So these are kind of the shortcomings. This is your potential for personal growth in fundraising. Now the question to you is, and this is where I need your honesty. I don't want you to actually share because there's too many people, but this is something for you to think about. What shortcomings, maybe out of my list, but you can make your own list, are holding you back from getting the investments, or which ones have become visible when you have raised funds. And in the end, I want to do a small mirror exercise, and the mirror exercise works in a such way that these shortcomings, by the way, why many investors don't like to see them in founders is that because it reminds them of themselves. So the mirrors in general work in a way that the world is like a big reflection to our inner world, and whatever we see, the behavior in the other people must exist in our own, otherwise we're blind to it. So the mirror exercise for you to uncover today, and something very practical you can do, is to think of the situation from the last week, not further, maybe last 2 weeks, which kind of made you angry or somehow pissed off. And can you think about what was specific in that person's behavior, what made you angry, or what you didn't like to see at all? This is putting a label on the behavior. And now, if you're really honest and interested, you can try to bring that label back to yourself and think, okay, if this is the what I'm seeing happening around me, and this is also a reflection of my inner world, so where am I exhibiting this behavior, right? So this is how the mirror works, and all the shortcomings which I also were talking about, they work as a mirrors as well. And that's why in the end, this exercise. And now, before we end, actually, I do have one ask for you, is to, let's take 1 minute. I would want you to scan this QR code or just use the link which we have provided. And there's one question in that code. And I'm gonna give you a minute to answer that question. And this question is about today's presentation. Like, what mirrors did you see today, either in me, in Sam, or maybe some other participant? I don't know what you've been looking here. And just write it down. If you saw one, put one. If you saw 2, 3, put it down. And by the way, mirrors are also positive mirrors, so they don't need to be especially negative. Maybe Aleksander thinks he's a startup comedian, but he's not funny at all. There's a mirror you see, and it's completely anonymous. So feel free and go crazy. I'm gonna give you 1 minute, and then we're going to take questions. Okay, and minute is done. You can also do it later if you wish, but since it was only one question, I guess you don't need overly time. So this is it with the presentation. Now I'm going to look few questions. Let me scroll back. Which ones are? I think that was still to. Okay, I lost my mouse. Okay, give me a sec. Okay, my mouse is back. So okay, so we didn't think that through, Reen. It's very difficult for me to read my own questions. Okay, there's an advertisement here. Very nice. Is there a possibility to get the recording after? I don't know, Reen. What's the answer? Yes. Okay. How much is a co-founder liability to the investment, and how often does that happen for both? How much is a co-founder a liability to the investment? And how, so, okay. I think Sam kind of answered that question, but Sam, feel free also to chip in if you feel like it. So for me, a co-founder is a liability to the investment in case where the relationship between the founders is not working. and which we have seen in our portfolio also happening, if the relationship between the co-founders isn't working anymore for whatever reasons, doesn't matter what the reason is, then it becomes a liability for the company. And this is why the contracts have bad levers clauses and good levers clauses, so that the company, even if there's something happens between the co-founders, there would be still an opportunity for company to move forward. And I quote Sam, we can sunset one of the founders. But Sam, if you want to add something, then feel free.
You hit the nail on the head.
All right. Now, next question from Anzi is, if the company is raising and gets rejected many times, is it a sign of pivot or for persistence? Meaning, when enough is enough? Okay, so this is a super interesting question, and especially because there is no answer. as always in life, it always depends on the circumstances. So for me, the answer is clear in the sense that if I look at fundraising as a journey rather than something with a certain destination, when it makes me sense to be on a journey if there's still something to learn. And still if I can uncover, let's say, either my shortcomings or challenges which I have with the fundraising and learn something about myself and about the business and make it better, I should continue. But now if we're talking about the resistance, I would very, very closely also listen to the feedback. So whenever a VC says no or is not happy with you, I would encourage you to ask why and really use this opportunity to learn something about the process. And many VCs, if you actually ask them if you're genuinely interested, if it's not coming in the format of blame, hey, you didn't invest in us, like, what the fuck? That I wouldn't like to answer. But if it's like, hey, we haven't raised Series A before, and obviously we're doing something wrong, like, what would you have us change? So this is a learning opportunity, and I'm certain that VCs will happily actually give you this guidance. So as long as there is something for you to learn, I would continue going it. And then pivot pivot is a whole topic on its own, and I don't really feel like going into it. And let's see, Riin is back. That's not the question. Tom, questions was good. Okay, not the question as well. Okay, and let's take that as a last question. Question for both. Do you invest in startups from SEE region? So Contriver, Cocoon Ventures is completely region agnostic. So if you're a founder, if your business is doing well, your cash flow is sustaining yourself, doesn't have to be cash flow positive. If you're at a later stage, meaning pre-Series A, Series A, we don't really care from which region you come. And if you're interested in self-development and looking at entrepreneurship as a way for self-growth, then the region doesn't count. Sam, how about you?
Yeah, same. Well, we are completely kind of location agnostic. Well, I think Zoom has benefited us in kind of accelerating investing around the globe. But yeah, don't let location be a barrier for us.
Mm-hmm. Okay, thank you. And with that, I conclude today's session.